Dumelang. I am going to do financial statements for grade 10 accounting. We've got the pre-adjustment trial balance, and we are given information extracted from the financial records of Veritasi Limited. Veritasi uses a 25% markup on cost. That information is very, very important. I would advise you to highlight it. And we are given the pre-adjustment trial balance of Veritasi Limited on 30 June 2022. That highlights the end of the financial year, meaning that the financial year will start on the 1st of July 2021. When you count from the 1st of July 2021 and you count exactly 12 months, it means that the end of the financial year will be the 30th of June 2022. As I indicated, I will first start with the nominal accounts section. And the first thing I will start with will be the sales value, which is 5,250,000. That 5,250,000, I will record it. Note that under nominal account section, we've got only income and expenses, and income and expenses will definitely go to the income statement, i.e. the statement of profit or loss. In 250,000 and the cost of sales amount of 3,510,000, I will take them straight to the income statement, i.e. the statement of profit or loss. And the first thing I will start with will be the sales amount. That will be the 5,250,000. But immediately from the 5,250,000, I will subtract my debtors allowances from the pre-adjustment trial balance. I will basically subtract debtors allowances, which was given in the pre-adjustment trial balance of 65,200. Please note, for this debtors allowances amount that is in the pre-adjustment trial balance, the fact that it is there, it means the cost price that relates to that 65,200 has already been recorded. Remember, when you recognize debtors allowances, you debit debtors allowances, you credit debtors control. That means that 65,200 has already been deducted from your debtors control. So that entry was already done. And then you will debit trading stock and credit cost of sales. You will debit trading stock and credit cost of sales. It means that transaction or that entry was already done. We already increased our trading stock and we already decreased our cost of sales. If you don't understand that entry, please go to my channel, look under podcast, and the podcast name I think will be Debtors Journal. So that is for grade 10, debtors journal. That is for grade 9 and grade 10, where I explained the debtors allowances account and the debtors control account, as well as the effect that your debtors allowances will have in your general ledger. I explained that thoroughly there. So note that when a debtor returns goods, 4 accounts will be affected. And that is why I'm saying when it comes to the other accounts, the fact that we've got debtors allowances here, it means that the other 3 accounts were already recorded. So there is no need to record them. Okay. And the next thing will be my bad debts, which is an expense. So that will go under operating expenses. Okay, so I will highlight everything that goes under operating expenses. So it'll be your bad debts, it'll be packing material, it'll be advertising, it'll be sundry expenses, salaries and wages, directors' fees, as well as audit fees. All of those will go under operating expenses. And the ones that will go under operating income will be bad debts recovered and rent income. Someone might be wondering, but what about interest on fixed deposit? Please note that interest on fixed deposit does not go under operating income. Instead, it goes right at the bottom of your statement of profit or loss as interest income. Basically, under operating income, note that from your sales, I'll minus debtors allowances. And then under operating income, I will have bad debts as well as rent income. And I will leave it like that. And then I'll go to my operating expenses. I will start with bad debts, and then I will have packing material. Please note that you need to add packing materials that were there at the beginning of the financial year. These are packing materials that were not used in the previous year, and they will be given to you in the under the financial position account section, i.e. the balance sheet section, as consumable stores on hand, and they will indicate these are consumable stores on hand at the beginning of the year. So those are consumable stores that were not used last year. We will start with them, add them as our expense, and then add the ones that we purchased in the current year, which will be the ones that you see under your operating expenses, the one that you will have under your pre-adjustment trial balance and the expenses. So it'll be this 11,550. You will add it with the packing material that you had at the beginning of the year. Both of them, they will constitute your expense. Both of them will be your expense, okay? Unless the adjustments tell us otherwise. Obviously, I can't jump to adjustments right now. So for now, we'll just add the two and wait to read my adjustments, okay? And after picking materials, we will have advertising, which is 180,900. And then we will have sundry expenses of 25,600, salaries and wages of 350,000. You don't have to jump. I jumped 2 rows, but you don't have to jump the rows. And then you will have your director's fees of 384,000 and audit fees of 40,500. And then I will stop there. Now I've recorded all my operating expenses that I've got in my pre-adjustment trial balance. And I've also recorded all my operating income, which I got in my pre-adjustment trial balance as well. We good? Now, since everything that is in the pre-adjustment trial balance has been recorded, wait, before I even go far, not everything was recorded. I did not record the fixed deposit. So I'll go to my operating, do you see operating profit? Underneath operating profit, that is where you will record your interest income, which was 12,430. And that was just your interest on fixed deposit. So we'll also record it in our interest income note, which is note number 1 under the notes to the financial statements on the 30th of June 2022. Now everything under my pre-adjustment trial balance has been recorded. Now I can start with the adjustments, starting with the first adjustment. Now, the first adjustment says that the sale of merchandise on credit. I will highlight the credit part. Sale of merchandise on credit. Highlight the credit part. So we are selling, right? And you can't assume anything. So you just have to read the entire thing. So we sold to M. Da Silva for 10,000 Rand. Here is what triggers everything. That transaction was not recorded. Now, that is a problem. And immediately when you think about the sale of goods, you need to understand that it affects 4 accounts. It affects 4 accounts. And think of those 4 accounts. Because we sold these goods on credit, we are going to debit debtors allowances, meaning that, we are going to debit debtors control, meaning that we are going to be owed more. If it was on cash, we are going to debit bank. Understand the two. But the other 3 remains the same. We still credit sales, meaning that our sales are going up. So we need to add the 10,000 to sales. So we debit debtors control, we credit sales by that 10,000. I will focus on those 2. When we debit debtors control, it means that people that owe us will owe us more. So we will record that in trade and other receivables and increase our trade debtors. So we will increase our trade debtors. Already, when you look at our debtors control, according to the balance that was given in the pre-adjustment trial balance, our debtors control is sitting at 180,500. So it means that 180,500 is going to be increased by 10,000, and that will be recorded in trade and other receivables. So in trade and other receivables, we will have trade debtors of 180,500. Add 10,000 to that. Remember, I said debit debtors control. We increase our debtors control. We are being owed more. That's why we increase our debtors control by 10,000 Rand. So the debit side is sorted. Now we need to go to sales, which is the credit side. So we need to also increase our sales. And when we increase our sales, we will increase them by 10,000. That's it. Done with the 10,000. But here's the thing. I said to you that transaction will affect 4 accounts. And so far, we have only done 2. What is the other 2 accounts? You debit cost of sales and then you credit trading stock. But those 2, you record them at cost price. Those 2 will be recorded at cost price. You debit cost of sales. When you debit cost of sales, it means your cost of sales will increase. It means your cost of sales will increase, but they will increase at cost price. Remember, cost of sales increases whenever you sell. Cost of sales increase whenever you sell, and they increase on the debit side. So I am going to record that in my cost of sales. up there in my statement of profit or loss or the income statement, I am going to increase cost of sales by the cost price. How do I get cost price? Remember earlier on, I made you read it. We were given the markup, and the markup was 25,000 rand. How do you, 25%. How do you find the cost price when you're given the selling price, which is 10,000? You are going to take that 10,000 rand, multiply it by 100 because we want the cost of sales amount. Multiply it by 100 and divide it by. Note that the 10,000 rand is at 125% because it's the selling price. The selling price already includes the markup. Multiply by what you want, divide by what you have. You will simply take that 10,000 rand, multiply it by 100, and divide it by 125. And that will give you 8,000 rand. You add that 8,000 rand to your cost of sales because cost of sales increases whenever you sell. But at the same time, we are going to credit trading stock. Why do we credit trading stock? It's because our trading stock is going down. We are losing stock. Therefore, I'm going to, this one I will normally not record it in my inventory note. I will record it as part of my workings. So I'm going to go straight to my workings and prepare that trading stock. So this is what I know. Okay, my trading stock in the trial balance. Let me just show you where I got this value. Okay, I'm taking it from the pre-adjustment trial balance. And in the pre-adjustment trial balance, my trading stock is recorded right now. It is recorded at 481,230. But remember, this first adjustment was not recorded. So that is not true. That value is wrong. We need to adjust it. And how do we adjust it? By reducing it by 8,000 rand. So I'm going to come here and simply reduce that value, which is how much it was. So this is us calculating trading stock deficit or trading stock surplus, okay? So it was 481,830. I'm going to reduce that by 8,000. Don't worry, step by step, we get in there. We good so far? Good. Let's continue. I'm done with adjustment one. Okay, done. All right. So adjustment one, the dealer guy on. And make sure you don't go back to it. We're done with it. You've done what you needed to do with that adjustment. Let's go to adjustment two now. Adjustment two says that a credit note, and this is where you go back to grade 9 as well as grade 10. A credit note was issued to K Sithole. So we are the ones issuing a credit note to K Sithole. When we issue a credit note, it means that we are accepting the returns by the debtor. So the debtor is returning goods. And obviously, this is in respect of goods returned by K Sithole. The cost price of the goods was 6,000 rand. Interesting. And then they say the transaction was not recorded. Now, the fact that they're saying this transaction was not recorded, we need to record it. And when we record it, again, it affects 4 accounts. We debit debtors allowances at selling price. We credit debtors control at selling price. Debit debtors allowances at selling price. Credit debtors control at selling price. But now we're not giving the selling price. So I won't start with those 2. The other 2 will be debit trading stock because we are getting the stock back, and then credit cost of sales because these goods are returned. It means our cost of sales must decrease. So now I can record that one. I'm going to debit trading stock. When you debit trading stock, it means that we are having more trading stock, so our trading stock is increasing. I'm going to go back to that workings and add the 6,000 because it's the cost price. It is the trading stock. And then I'm going to reduce my cost of sales by that 6,000. So where do I reduce cost of sales by 6,000? I'm going to go to my income statement or statement of profit or loss and reduce cost of sales by 6,000. This is only the last two. Okay. Let's start with the first two. The first two is that we need to debit debtors allowances. Note that because we are preparing the income statement, when you debit debtors allowances, you are reducing sales. So when debtors allowances increase, when you prepare the financial statements, you need to reduce sales, but you only reduce sales at cost price. And this 6,000, at selling price. And this 6,000 is the cost price. So we need to find the selling price, meaning the 6,000 is the 100%, and we want the 125%. So we are going to multiply it by 125 and divide it by 100. Take the 6,000, multiply it by 125 and divide it by 100, and we'll get the selling price. And that selling price increases our debtors allowances. The increase in debtors allowances means the reduction of sales by selling price. So when you multiply 6,000 by 125 and divide that by 100, you will get 7,500. At the same time, you need to reduce your debtors control because this debtor is not owing you anymore. Okay, they're not owing you that 7,500 anymore. So where do we get our debtors control? We get it in trade and other receivables. So I'm going to go to trade and other receivables. And when I get to trade and other receivables, I am going to reduce it by that 7,500. Okay. Am I done with adjustment 2? The answer is yes, I'm done. So what can I do now? Now, adjustment 3. The owner had donated stock to Pilang, a school in Guatemala. The sale price of these goods is 6,250. Please note that here we did not sell the goods. We actually donated the goods. We gave the goods away. We are therefore losing. But what are we actually losing? We are only losing the original price of those goods, the price we paid for those goods. We are not losing the selling price of the goods, we are actually losing the cost price of the goods. And you will remember earlier this year in grade 10 when we did donations, I indicated that donations must always be recorded at cost price. Donations is an expense. It must always be recorded at cost price. Now, when the owner donated goods, the owner is donating those goods on behalf of the business. And therefore, we are going to record it in the financial records of the business. How do we record it? We debit donations because it's an expense at cost price of the goods being donated. Then we credit trading stock because obviously we lose in stock. Donations is an expense. When we debit donations, it means our expense is increasing. We will therefore record donations under operating expenses. But we need to record them at cost price. We were given the selling price, which is 6,250. You will take the 6,250, multiply it by 100, and divide it by 125 because they told you the 6,250 is the selling price. So it is already at 125%, and we are looking for 100%, which is the original purchase price. Therefore, take that 6,250 multiplied by 100, divided by 125, and it will give you 5,000 Rand, meaning that our trading stock must also decrease by that 5,000 Rand. We are going to go to my workings, and when I get to trading stock, I am going to reduce my trading stock, which I have in the trial balance, by 5,000 Rand. Done. That was adjustment 3. Okay. Problem 3 eliminated. So when you see anything that looks like adjustment 1, you know how to deal with it. When you see anything that looks like adjustment 2, you know how to deal with it. When you see anything that looks like adjustment 3, you know how to deal with it. When it comes to calculating cost of sales or sales and gross profit, please go under podcast, look for, there's a video which is, the heading is calculating cost of sales, sales and gross profit. So I did it as a table there. So you will know. Sometimes I gave this to my grade 12s. I said the business forfeited a gross profit of 1,520, I think. And I gave them the markup. But now I said, due to donations, that's how much the business forfeited. But they know that donations must be recorded at cost price, but I gave them gross profit. They should be able to work it out. So in that case, if you are given the gross profit, how are you going to work it out? You are going to take that 1,520, because gross profit is at 25% and we want 100. You will multiply by 100 because we want cost of sales, right? And then you will divide this by 25. Do you see? You divide it by 25 because it is the gross profit. And I don't know how much that was going to give you. Let me see. So in that case, we are going to record our donations at how much? Let me see. So it's 1,520. You multiply it by 100, and then you divide it by 125. Actually, this is not 125, it's 25, because the 1,520 is the gross profit. And then that's what they were supposed to get as their cost of sales. Okay. But it wasn't this exactly, but it was something similar to this. But the donation was the gross profit. I gave them the gross profit here. I gave you the selling price. That's why we took the 6,250, we multiplied it by 100, and we divided it by 125. Okay. So they just twisted there and there, but you should be able to deal with it. Okay, let's go to adjustment 4. Physical stock count revealed the following stock on hand. On hand means it is what we've got. On the 30th of June 2022. You need to understand, when you're talking about physical stock, it means that stock was physically counted, okay, at the end of the day. So what we've been doing, all of this, let me just finish this off. So they said trading stock then is 480,830 packing material, and they said for packing material, only 20% of packing material is used. And obviously they said accounting forgot to reverse consumable stores on hand on the 1st of July. So meaning that they were supposed to have added that packing material to the packing material for the current year, and they didn't do that, which we just did, by the way. Reversing means that when something is on hand, you normally debit consumable stores on hand, and then you credit whatever was on hand. The following year, because consumable stores on hand is a current asset, it means it must be converted into um, cash or used. In this case, it was used within 12 months. So next year, which is this year, and this consumable stores was for last year. So this year we needed to reverse that by debiting consumable stores and crediting consumable stores on hand, by debiting packing material actually and crediting consumable stores on hand. But that was not done, and we just did it. So we no longer have consumable stores on hand, it's zero, but our packing material must increase by that 7,500 of which we did earlier on. Okay, I'm just going to go to this trading stock. So the trading stock that was counted is this 480,830. Okay, that is the trading stock that was counted. However, in our books, the one that we have adjusted is not that much. The one that we have adjusted, because I'll have to close it, is basically this one over here, which is just based on the source documents. Remember, for 8,000, we use the invoice. For 6,000, we use the credit note. For 5,000, it is a general voucher. Okay, so basically, this is just based on the documents, all right? The documents that we have, and then we recorded it. That's why we adjusted it, and we got that 474,230. Damn, you know, when you're taught by me, especially from grade 9, you're on another level. I gave you everything. I gave you all the concepts that you need, and this should be making sense to you. It should be making sense to you. It should be quite easy for you. Okay, so it's all about debtors allowances, debtors general, basically. And that's what we have as trading stock, which is 474,230. But that is incorrect. Why am I saying that is incorrect? I can't rely on that because it's just based on source documents. What I can rely on, though, is this one. Why do I rely on the 480? Why do I say 480 is the accurate one? So whatever we have up there in our adjusted trading stock balance, it needs to be adjusted to the one that was counted. Why do I say it? It is because the one that was counted, guys, it is there. You counted it. You physically saw it. You counted. It's there. You can rely on that. It is there. So that's why we say that is the accurate one. And the one that was counted, you don't even have it to hesitate. You take it straight to your inventory note. Okay. You'll take it straight to your inventory node, which is node number 4, and you'll put it there as counted. Okay. I realize that I hope it's the next one. Please may it be. Oh, it is. Thank you. So we're gonna have trading stock there, and the amount will be 480,830. That's why I said it's just useless for you to make the adjustments here, because whatever you record here has to be the stock that was counted. Check under adjustments, okay? Adjustments, trading stock adjustment. I explained this thoroughly there. Okay. And then now the problem is our trading stock that is in the books is wrong. We need to adjust it. And how do we adjust it? It is lower than the one that was counted. So we need to take it up. When we take it up, we debit trading stock. But because we're taking it up, when you take it up, it means that we are realizing income. And that income, we will call it trading stock surplus. This is an extra stock that we didn't expect. So we debit trading stock, we credit trading stock surplus, which is just income. So that trading stock surplus of 6,600, how did I get it? I took the stock counted and I subtracted the one that was in the trial balance. That's how I got it. So that 6,600, I am going to record it under operating income as trading stock surplus. Okay, so I'll record it here as trading stock surplus. Make sure you show the workings in brackets, and it'll be 6,600. Done. Oh, we're not done yet because they said 20% of whatever we have as picking material will be. Let me just go back to that adjustment. Okay, so basically I'm done with this one. I'm just left with this one here. It says 20% of packing materials is unused. Oops. So you will remember from what we did. Please check on the adjustments again, podcast adjustments, and then look for trading stock where I explained it thoroughly there. So if it was unused, it will be part of consumable stores on hand. But the one that you're going to record under operating expenses will be the used packing material. So how do we calculate the used packing material? You are going to take that 7,500, add it with 11,550, add them, get the sum. And only 80% of the sum was used. And the used one will be the one that we record here as an expense. Used expense, used will be, so basically here, the picking material used will be the expense. The unused, we are going to record it in the inventory note as consumable stores on hand. Okay. Which is a current asset. Okay, so this is consumable stores on hand, and that will give us our total inventory. We're done, just like that. That's it. Okay, so we can say that adjustment number 4 is done. We're done with it. You're not going back. We're moving, keep on moving. No matter what you do, keep on moving. All right. That's one thing about life. You keep on fighting until the end. And the fact that you are watching this video, it means that you are giving yourself a chance to fight for a better life. And trust me, accounting will give you a better life. Just pass accounting and maths and English. Go do chartered accountancy. It's in demand. And trust me, you'll have a better life, a good one. Okay, let's go to number 5. It says that we need to provide for outstanding interest on fixed deposit. So we know that there's interest on fixed deposit that was not received because they say we need to provide for it. And they say interest on fixed deposit is not capitalized. Firstly, how do I calculate interest on fixed deposit? I'm going to go back to the trial balance. So I know that my fixed deposit, which is an investment, I was talking to my grade 12 right now. When we invest in, it's an investment. When you put your money in a fixed deposit account, it's an investment. And I don't see any fixed deposit here. It should be under financial position. There it is there. It is 310,000 and the interest on that is 8%, which is obviously it might be 8%. They needed to specify that per annum. So it's 8% per annum. Okay. So I'm going to take that 310,000 and just calculate my interest on fixed deposit. That's what I'm going to do. Okay. I already did this packing material. I did this already. So you first calculate packing materials, total packing material available to be used, and then you subtract packing material that was not used. Packing material available to be used will be packing material that was not used last year plus packing material that was purchased this year. You add them up. That is packing material available to be used. Okay. I think I discussed that. Now, fixed deposit. That is the interest. But when I calculate my interest, it gives me that my total interest is supposed to be 24,800. But the one that was recorded in the trial balance is 12,430. So it means that there is outstanding deposit or interest that was not received, which will be 12,317. That 12,317, it was earned, but it was not received. Therefore, it will be recorded as accrued income. Otherwise, it was going to be added to our fixed deposit if it was capitalized, but here it was not capitalized. So and here's the thing, okay, should I discuss it now or later? Let me just discuss it right now, okay? Should I discuss it now? Okay, I'll just discuss it now. Guys, you need to understand, when you prepare financial statements, you are doing this at the end of the financial year. So when we're talking about current assets or current liabilities, that's why they say statement of financial position as at. Okay. So you're preparing this right on the 30th. Is it the 30th of June? Yes, it is the 30th of June, right on the 30th of June. So anything that is current assets is any resource we expect to convert into cash or use within the next 12 months, not in the current financial year. Know that the current financial year is concluded already. We are at the end. Any current asset that we recognize during the year, by the time we get to the end of the year, it's realized. So it's no longer a current asset, because current asset is something we use or convert into cash within 12 months. But the fact that we're recognizing an asset or a current liability at the end of the financial year, please note that when we're talking about 12 months, it's from the end of the financial year up to the end of the next financial year. Anything in between, whatever we owe and we are going to pay between the end of this year and the end of the next year, is a current liability. Anything that we expect to receive or convert into cash within from the end of this year to the end of next year is a current asset. So this accrued income, which is 12,370, we don't expect to receive it in the current year, guys, because we are at the end. That's when we are recognizing it. We are recognizing it at the end of the financial year. So we expect to receive it all converted into cash within the next 12 months. Understand that. That's what a current asset is. Okay? So that 12,370, it is my income in the current year, and it is also my accrued income in the current year. So since it's my income in the current year, I am going to first start by adding it to my interest income note, which is note number 1, and I will add it there. So I'm going to add 12,370 because we have not received it, so that our expense can our income, interest on fixed deposit, can go up to 24,800, and then obviously we are going to add it. So that 12,370 is what we call an accrued income. This is the other interest that we can include. Okay, so we show it without brackets. That's why that 24,800 is without brackets. I gave my kids something similar to this, my grade 12s, and yeah, it dealt with them. They took the 12,430, they added the 24,800 without realizing that the 24,800 is the total interest. So what's missing is 12,370, which is accrued income. Obviously, it's not the same amount, it's different, but same principle. So accrued income is a current asset, as I specified. Okay, current assets are recorded in trade and other receivables. So we're going to record it there as accrued income. I left it open because I don't know what to expect. What's next? Okay, let me just conclude this slide. Unfortunately, it's quite late for me. It's around 9 o'clock now as I'm recording this video, and yes, I need to go to bed right about 9:30. So let me just conclude this. Please be on the lookout for part 2. Okay, for part 2 of this video, because I'm going to finish all the adjustments. We are preparing the statement of profit or loss or income statement and the notes to the financial statements, as well as the statement of financial position, aka the balance sheet. Okay, I'm just going to finish up to number 6. So we're done with number 5. So I can cross that out. Done, finito. Done. Okay, let's move on to the next one, which is number 6. It says that a debtor has been declared insolvent. Immediately when I read that, I celebrate, because that means that there's someone that won't pay us. So his estate paid 40 cents. So 40 cents is what is paid. So meaning that the 60 cents is what was not paid. And they said this 40 cents amounts to the 7,200. So the 7,200 is the 40 cents, is what has been received. And that was recorded. So the 40 cents has been recorded. That's 7,200. What did they do? They basically debited bank So bank was increased by 7,200 and they credited debtors control. It was recorded. It's done. So basically that 7,200 already in, when I go to my trading other receivables, it's already deducted there. It was already deducted. It has been recorded. And it was already included in my bank. Bank will normally get it when we prepare our cash and cash equivalents. So it was included in there as well. Okay, so that's what we received. We received the 40 cents. We did not receive the 60 cents. The 60 cents we did not receive. That is, so basically this is what is happening. Let me just summarize it in bookings. Oh, my notes are just awesome. Hey, my notes are just awesome. It takes so much time to prepare these notes, but every time I go through it, I'm like, wow, because I prepared those notes last year and I don't know if I posted a video on these notes. I don't think I did. But right now, I'm just going through this paper and I'm like, oh, is that me that prepared these? Okay. Yeah, you will never get this anywhere else. So please don't forget to subscribe. Actually, hit that subscription button, notification button, because your good accounting mark depends on this. You'll never get this anyway. Otherwise, you can enroll to Veritas College. Okay. Yeah, let's check. So the amount received is that, which is the 40 cents. Amount not received, we don't know, but we know is the 60 cents. If I want the X, guys, you just take 7.2, you divide it by 40, you multiply by 60. Multiply by what you want, divide by what you have. Easy. By now, you should be used to this, guys. Okay, so that's what I'm going to do. I just calculated my bad debts. It's 10,800, just like that. That amount was not received. It's bad debts. So you debit bad debts, which is an expense. You credit your debtors control because they told you that the remainder was not recorded. So all I'm going to do when I debit my bad debts, it means my bad debts expense is going up. I'm going to add to bad debts, and bad debts will be under operating expenses. You add that 10,800 to bad debts. Oh, these notes are amazing. And then it means your total bad debts for the year will be 15,120. But that 10,800, we debited bad debts. We need to credit debtors control. I'm going to go to my debtors control and subtract it. Why am I subtracting it? It's because this debtor was written off, so they don't owe us anymore. So I'm just going to subtract it from my debtors control. It will be 10,800. Okay. Okay, what did I do? So that is the only accrued income we have. So I'm going to subtract the 10,800 for my debtors control. Okay. And I'll just leave it here for now. Be on the lookout for part 2 of this video. That was good. Slower than I am normally. But if you listened carefully, I'm sure by now you're getting closer to being that distinction student. Grade 10s, please understand this. If you have a grade 11 friend or grade 12 friend or brother or sister, tell them to check this video out, and trust me, they will benefit a lot from this. We still have a lot to go through. We still have adjustment 7, 10, up to 10. This side, we still have those as well. So be on the lookout for the next video. All right. Kyaleboha, Kyaleboha. Thank you for watching. I see we have reached 1,000 subscribers. Please don't forget to watch the videos. So we need watch hours now, okay? Please support. Thank you, Pretoria. Thank you, Cape Town. I always say Pretoria. Thank you, Tswani. Thank you, Cape Town, Kapstadt. Thank you for always supporting this channel. I really appreciate it.